Hi everyone, this is Chris over at Williams & Co Trading. Just wanted to give you a quick preview for this coming week. We usually do our webinar at 8 PM UK time every Sunday. I'm actually on holiday tomorrow, Monday, so I just wanted to do a quick recording as we wouldn't have time to go live tonight. I'll still post this in the chat room at 8 o'clock. It just means that I won't be able to take any requests. If you have got any requests, just drop me a message in the chat room and I'll be able to give you a quick update on whatever it is you want to look at. So here's what's on my radar. I just want to quickly run through this, keep it short and sweet. I've had my eye on the euro for a little while now. As we went over in last week's webinar, we had a strong 5-wave move down and we were looking for a 3-wave ABC correction. We had it here. I think a number of people will have got short, believing that this 3-wave correction was done and we can continue to be bearish. We then had another 3-wave move down to the lows. Okay, after a correction we want to see 5 waves. Okay, we want to see this just completely collapse, for us to stay bearish. And what's happened is we've just had 3 down to the lows, and that is what we call a flat correction. Okay, a flat correction will have 3 against the trend, and then it'll have 3 in the same direction of the trend back into those lows. The final leg of a flat correction is a C wave. Okay, so we've had this red wave A, red wave B down to the lows, and now we want red wave C. And I expect that could come to the same level as A did. That would mean that they were roughly the same length. But what would be nice if it extends a little bit, just so we can squeeze some more pips out from the long side. Obviously gives those who want to get short up here a better risk reward as well. So ideally, if it's going to play the game and play the rules, this thing will hopefully come up to, I'd look for 50%, just because we've got previous support here, a little bit of resistance here. So it'd be a nice area to get. So if I zoom down onto the shorter time frames, I'd said last week that I wanted euro dollar to be above 114.50 or 114.40. Okay, we actually crossed that area last week. We didn't close above it, but we've still probed into that area, which for me is confirmation enough. Okay, it doesn't stack the odds in your favour anymore. If it was a close, that would be better. But it has broke the rules of Elliott wave, and the rules of Elliott wave is that if this is a 5-wave move down, wave 4 will never step into the territory of wave 1. So if this A is wave 1 and B is wave 2, this would be 3. 4 has already crossed into A. Okay, if you look at it that way, we could look at this as being wave C. The same thing would apply. Wave C has 5 subwaves, so this would be wave 1 here, 2. We could say it was wave 3 to the lows. You could say it was wave 3 to here, and we had another flat correction. But either way, if this is 4 and we're heading lower, it's just stepped into the area of wave 1. Okay, so that's one of the rules of Elliott wave analysis, is that wave 4 should never probe into the area of wave 1. Okay, so I'm just gonna draw it out. So obviously the first scenario would be that A is 1, B is 2. This could be some kind of wave 3, and then this is 4. You can see it's overlapped. Okay, and if we draw it the same way I have, that this is A and this is B, we know that C has 5 subwaves. Okay, so let's count the subwaves. 1, 2, I would say that's 3, 4, 5. However, we could still be in a 4. This could be, a complex ABC pattern up for wave 4. But again, we probed into this area of wave 1. We've overlapped. So that for me is confirmation that this was 4, and we've completed number 5 down here. Okay, which touched this big head and shoulders neckline. Okay, if I zoom out, it's a big shoulder pattern. Personally, I'm not massively keen on them. They're one of the most common patterns you can find. They do have a, once the necklines break, they tend to have a good chance of happening, something like a 70% chance. But for me, I think this is it's a flat correction. It's fairly clear to me. So I want this. I expect this to head towards the 118 area. So now that we've bounced, and as we see on the daily chart, we had a really strong daily candle. Okay, big green candle here. So I'm going to zoom right down to, let's see, the 2 hour. Okay, so I'm going to put a Fibonacci retracement, and we went over these last Sunday as well. Fibonacci retracement essentially measures the length of a trend, so how many pips it's travelled. It then puts popular percentage retracements basically on that move. So if we move 100 pips in a trend, the Fibonacci would measure 38 pips, 50 pips, and 61 pips. Okay, because those are the Fibonacci numbers. You can Google that if you want a little bit more info. All it is it's just a mathematics thing. They're just very popular numbers that a lot of traders use. That's why they work. The market uses them. People use them as buy and sell levels, so I do as well because they work. We've actually tagged the 50%, which is enough. 50% is enough for us to bounce from here and just to, we could just go straight up from here. What I'd prefer is a 618. So just for it to squeeze down just a little bit further. Okay, it could come straight down, or it might get a little bit more complex. It might bounce up here and then come down. Either way, whichever way it happens, I would prefer us to get a 618. If we start breaking above 114.10 or 114.20, that could be confirmation that we're heading straight up. So there might be an opportunity to buy the break of 14.20 if it looks strong, but I would prefer the 618. That would just be cleaner. The risk reward might not be there on the break. We just kind of have to wait and see on that one. So I have my eye on the euro. The 618 level, by the way, comes in at 113.60. So that's what I'm watching for a reaction. If I was, if we would take that trade, the invalidation point is these lows, which is around 113.10. So you've got like a 50 pip stop loss there. Your potential is that we replicate the length of this move, which was, let's see, about 150 pips. So you got a 3 to 1 at least. That's providing it doesn't extend any further than that. So that's a nice trade set up there. The pound again had a really nice rally. Nice daily candle, 2 daily candles there in the pound. It's exactly the same situation. We've had 3 waves up in an ABC. We've then had 3 waves back down to those lows. So there's our flat correction, and it just needs to complete with wave C. So we're going to get 5 waves for wave C. And I would like, again, we could get similar levels to where we got these previous highs. I would prefer it if we can get 50 or 618. But again, we're not going to know until we get up there. In the meantime, it looks good for longs. Just that you have to get a good pullback on this. It's so strong that it just might not pull back. So I wouldn't take it at market just because your risk is way down here. I think we moved something like 300 pips, and we've not really pulled back very far. So I'd be waiting for. I'd want this to continue. Sorry. To continue like an ABC pattern down to at least the 50%, something like that. Given that it is really strong, that might be all we get. But I do prefer 50 or a 618 definitely, just because the risk reward is a lot better. Aussie, same thing again. And we've actually broke out of a channel in the Aussie, which is why I do prefer this one for long positions, which is partially why we're not really in that Aussie Kiwi now. It's kind of chopping around, doesn't really know where to go. And now the Aussie looks quite strong, so I'm fairly glad we come out of that position. Although we'd have to look at the Kiwi dollar on its own, to compare. But for me, this is broke out of a channel. I think we'd probably retest it. So if I come down a time frame, that could be wave A finished there. Okay, that's quite sharp. Wave A. This would be B. Wave C straight into this trend line again. It's like 71.40. You could probably risk the other side of this trend line. Give it a little bit of room. You've got some area of chop around here. This whole area is just completely sideways. So I think if it falls back into there again, we're just going to get chopped up. So, you could put your stops at 71. There's a 40 pip stop for you. If it goes the same length as this first move, you've got 230 pips there on a 40 pip stop. It's like 6 to 1 almost. Okay, so great opportunity in the Aussie. What else do we look at? Dollar CAD, just been chopping around again. We're still inside this kind of wedge formation. I suspect we probably should break down sometime soon. I'm still waiting for around 130-ish, so we can get long. There's nothing really to trade here, not for me. It's a bit too choppy to be overly bullish. You know, we've not really pulled back far enough to be buying this. Another important one is the Swissy. Just want to go to the daily. So we came out of this descending wedge or ending diagonal. It's really come a long way. You know, I wouldn't want to short it just because it looks so strong. So the only direction I'd want to trade it is long. But we need a decent pullback. Apologies if you can hear all that noise. There's a lot of fireworks going on outside tonight. So we want a decent pullback in this. Again, it's so strong we just might not get it. You know, we might be lucky to touch these lows here again, which are in between the 38% and the 50% fib levels. But at the moment, it's not on my radar to trade in the short term, even short, just because it's come so far. Okay, dollar yen. So this is a trade we are in. We're short. This one, we've had a strong move down from the highs at 114.50, and since then all we've had is chop. Okay, this is just like sideways, very corrective. I can't see it, you know, bouncing any further than it has. If we go down a time frame, you probably could channel that, but it's kind of ugly, doesn't really work. Ideally, I didn't really want 1340 to break. We could get, let me see, put a fib on this. I'm going to put it to here because to me it looks like a flat correction. We almost tagged the 618, we fell just shy of it. If I put it to the bottom, the very low, we did tag a 618 and we almost retested it on Friday. Again, for me, providing this area holds, I'm pretty happy. You know, we've got stops at 114, which is pretty tight, to be honest. You know, if we push into 113.75s, you know, I might take the loss early, but because I've got stops so tight, it's you know, I really just want to see it at 114 to definitely be out of the trade. While we're still below that level, you know, there's definitely still the chance that this thing could go. I'll just go zoom out to a daily. We might not get a lot out of it. It might just be a 3-wave move, you know, into 110.75. I've got as the first fib level. But more importantly, what moves the dollar yen is US treasuries. Okay, so the 10-year treasury note. So essentially, when these are US bonds, T-notes. When these bounce, when US bonds, the bond market bounces, dollar yen drops. Okay, there's an inverse correlation. Okay, reason being is that bonds move inverse to yields. Okay, really the correlation is actually between yields and the dollar yen. Okay, so if this posts a new high, I may think twice about the dollar yen. So I am watching yields. And you know, likewise, I'm watching the bond market as well, because this does look like we only had 3 up. If you go down the time frame, you probably can count 5. You could, but it's messy at that. If I put a count on it for you, you can see what I'm talking about. So 1, oh, sorry. Count this as 1, 2. Could be a 3 in here as opposed to at the top. That would be a 5-wave move. Okay, it's not highly likely, and then obviously ABC correction there. As soon as we come probably below this 2, I'm not interested. So you know, so if we do really accelerate to the downside, it means we're going to post a new low. and we're going, you know, back into the low 117s in bonds. At which point, you know, we could then look at the dollar yen again, you know, in a new light at a different level. But for now, this is really, really important for dollar yen. If we crack these levels, then we'll probably close out that trade and we'll look elsewhere. Just thinking what else we have open is euro pound, which absolutely dumped last week. We need this thing to come back for us. I don't think it will. If we're lucky, it'll get a 38%, but a 38% is not a good risk reward for me. So you know, it's not something I'd be looking at. I'd want it, you know, I want the structure to come a lot higher, to recover a lot more. What else are we in? I think that's it. Is that just the two? Well, this is just a pending order, the euro pound. We are in the yen. I can't think now. Bear me 2 seconds, guys. Of course, Bitcoin, isn't it? That's the one I've missed. I knew there was something else. Okay, I want to look at it on Bitstamp. That's interesting. Very interesting Bitstamp prices there. Let's have a look on Coinbase. Okay. So it looks like, just draw it from here. I may look to close this one. I'm not really loving that. I hadn't seen that over the weekend. This is me looking at it for the first time now. We're still below it in Bitfinex. I'm really not sure on that. We might be closing this one, guys. Let's see fib levels from that. I may wait for Bitfinex prices to crack the trend line, but Bitstamp and Coinbase both have. So I'm going to watch, and if all three exchanges have cracked the trend line, we'll close out. Because I'm really not keen on hanging on to a trade there when we've broken that on that exchange at least. Obviously, trend lines, you know, they vary. You can draw them differently. It's not like we've got a huge daily green candle. But it does look today we're at least attempting to push through it. I think our stops aren't too far anyway. Okay, guys. Well, that's it anyway. I'll keep you updated on euro pound. It's still a pending order. Whether we even get up there, I don't think we will. So that may have to be cancelled as well. Let's just see how it goes on Monday. That's it for now. There's nothing else I really wanted to cover. So if you've got any requests, anything I've missed out, just give us a shout in the chat room. I can send you some charts. That's not a problem. Alright guys, I'll see you in a bit. Bye.